Well, let me bring on board market veteran and someone who's often called as one of the best macro caller of Indian economy, Prabhat Awasthi, Head of Equity, Managing Director with Nomura Financial Advisories and Services Private Limited. Prabhat, fantastic to have you back. Good morning. Thank you for joining us. What a crazy Tuesday morning it's been for us.
Good morning.
Pharma on one side, Infosys on the other side, Parliament about to start in next 2 hours. So it's been just one of those crazy Tuesdays.
Yeah, I guess the good thing is the market, at least from the warning from Sun Pharma, at least we got a boost of good news from Infosys. And we've been able to sort of hold on to the market gains that have been made over the last few days. Parliament does remain important, I think, from the perspective of just having some more policy news that, most of the participants, especially the foreign investors, are waiting for. So, I guess the expectations are not as strong as they used to be. I mean, in terms of, for example, most of people don't expect land bill to go through, but GST there are some hopes. So if we do get that through, I think that'll be enough from market perspective in terms of the reform process moving forward.
Prabhat, let's start off with the good news then. And Infi, strong volume growth, the best it's posted in about 19 quarters. A confident management commentary, at least so far. Do you sense that the stock could go in for a re-rating and thereby the rest of the IT pack too? At least that is what seems to be playing out today. Infi is clearly given a leg up to the entire sector, so to speak.
I think we will wait for our analyst to put out his commentary. I mean, obviously, it's a positive result. It's beyond the expectation of the market. They have surprised after a very long time, and that's why the stock has seen that kind of reaction. But so far as the actual commentary on the stock goes, I'll wait for my analyst to come out with the note. So far as sector is concerned, I think we have generally been positive on the sector, not only because the fact that these companies are growing at a certain pace, but also because the valuations are not that demanding compared to history. So our overweight on we have been generally overweight on the sector, primarily because we generally have valuation comfort and the fact that US economy has been doing well. So from that perspective, we think that it's still a sector where you will get above market returns over next 1 or 2 years.
Challenge for the Indian IT sector of late has been that a lot of disruption is happening. Some companies can go up the value chain, others are struggling. What is your view on the sector in the light of what is happening in the digital space, what is happening in the cloud space? Because the sector is going through a process of mass transition. Some companies will survive, some will accelerate, and some will die.
Yeah, so I think the adoption by Indian IT companies has not been too bad. Actually, the companies which are because of the cloud, from what I understand, the rebates on the infrastructure space actually are going up, and the Indian companies which are in the infrastructure space are clearly benefiting from that. So the number of rebates are increasing. And for example, companies like HCL and TCS do compete in that space pretty effectively. Clearly, so I think across the large caps in general, our belief is that they are adopting to the changing world, and therefore we don't really think that the sort of fears that are there in terms of cloud destroying the business model of these companies and they're not being able to adopt are necessarily true. And we do think that some of the Indian IT companies are quite well positioned from this transition that will happen because of cloud, etc.
What about Sun Pharma, Prabhat? The guidance cut, does it seem like this could trigger a big round of downgrades, not just for Sun Pharma, but concerns or other question marks also being raised in terms of what other pharmaceutical majors would do?
So I think, again, I'll just give you a sector-specific comment. Sure. We have generally been underweight on the sector, primarily because of the fact that we have not been comfortable with valuation in the overall construct. The fact is that the sector has delivered superlative growth in earnings over the last 2-3 years. A large part of that has come through because of price increases in the US market, and our belief has been that some of these price increases will invite competition and the pace of growth will slow down. So it's not that, and that sort of being built into the valuations, the market giving a higher multiple on base of inflated earnings is something that we've been worried about. Obviously, you have seen sector-specific issues sort of proliferating as far as US FDA is concerned, so that's also another concern. So between valuations, the sort of how you're getting your profits in base business and the fact that your regulatory challenges have become higher, we have been a bit uncomfortable in terms of having an overweight. So we've been underweight on the sector since the year beginning. It really didn't work out for a large part, but I think post today's move, maybe sort of you'll probably see that the sector has sort of become more in line with the market rather than a big outperformer.
Prabhat, what would be the overall construct then? Is this quarter's earnings assumed to be washouts, or could there be a positive surprise? Because I must say, as you mentioned as well, I think technology has sprung a surprise. People didn't expect too much and they have delivered reasonably well, the large caps as well as the mid caps. Could there be a positive surprise in earnings this quarter or quarter two itself? And would that make people change the perspective? Because everybody's now talking only about the second half of earnings. Everybody's believing that the first half is a gone case any which ways.
So I think just from the year-on-year perspective basis, I think this half will be a washout, primarily because the first quarter and the quarter before were actually not that great, because end of the day we had a massive commodity correction, the economy was very slow, the government spending slowed down. So all that essentially slowed down the economy quite a bit, and you essentially between all these factors you got a very poor earnings season in the last two quarters. And because of the fact that last year the base was not that bad till September, your year-on-year impact on earnings will remain quite heavy. Having said that, what we have mentioned in our earnings note, for example, is that we believe that on a sequential basis this quarter is not going to be all that bad, primarily because on a sequential basis for the companies we cover, analysts are forecasting sort of flat quarter, which for the June quarter actually usually sequentially there's a big dip because of the seasonality. So we do think there is some sort of recovery which is happening, and therefore while the year-on-year picture doesn't look that great, but the fact that sequential recovery is happening means that the second half will be mathematically much better. Clearly, so far the evidence that we have seen in terms of earnings has not been that bad, but it's a very small sample. But we have seen some banks report, we have seen some companies in cement report, we have seen technology earnings. In general, cost side, people have sort of tightened their belts. The top lines are not that disappointing. So between all the factors put together, so far the evidence is that between sort of poor expectations that have been formed, between the cost cutting the companies have done, the results season probably might turn out to be sort of not kind of washout we saw in the last two quarters. It will probably be a bit better.
Well, some comments coming in from the Urban Development Minister regarding the monsoon session, or just ahead of that, I should say, stating that they're going to consider the real estate regulation bill as well this time around in the session. Prabhat, what is the market pricing in terms of how action-packed the monsoon session of the Parliament could be? Could we see some crucial decisions go through, or is it going to be all noise this time around as well?
So the market expectations have come down a lot since the political sort of logjam surfaced a couple of months ago, and I think most of the investors we speak about, I think, have largely given up the land bill, and the expectation that the GST will go through also have come down. So I think from investor perspective, the expectations are not very high. If something goes through, which something like GST, I think GST is the main one, because the other bills I think market is not that focused on. It's been largely focused on land and GST. As I said, land people have given up hope. GST, there are some hope. So if GST goes through, there'll be a positive. Doesn't go through, could be a bit of negative. Apart from that, I think there was a big concern on monsoons, which sort of dissipated, came back a bit, and I guess it's a daily basis news flow on monsoons. But between the fundamental news and parliamentary news, I think obviously a positive news on the reform side could be reasonably very positive from the market perspective, because as I said, the kind of hopes market had have come down dramatically in the last 2 months.
Okay, Prabhat, the missing ingredient right now is earnings. But if I keep that missing ingredient aside, do you think Indian markets in general are in a very, very sweet spot? China has taken a huge knock. We've come on the right side of Greece. Gold is at a multi-year low, and we are the only large economy where perhaps interest rates are likely to come down. So both in terms of perception, in terms of an asset allocation, and also in terms of compulsion, I guess we are in a very sweet spot. I mean, it's so sweet that I worry about diabetes.
Nikunj, I think Nikunj, you're absolutely right. Absolutely right. I think you sort of hit the nail on the head. The fact is that the global environment is much better than what it used to be, in the sense that the global risks have dissipated significantly. Secondly, I think you rightly said commodity prices have come down. Dollar has gotten stronger, so that helps India in terms of balance of payment and the inflation picture. I think the fact is again that a number of larger economies in the region are still experiencing slowdowns. China obviously is experiencing some amount of slowdown. Our economists in other markets also, for example, this morning we cut growth forecast for Indonesia. So a lot of other markets are also looking a bit weaker than they were really expected. So in that context, in the context of a weak global scenario and the fact that India at the margin is starting to sort of grow a bit better, clearly puts us in the right spot. And China obviously was diverting a lot of attention away. That I think so people got rudely reminded that frothy markets are always sort of can be a bit dangerous in terms of playing them. So I think your prognosis I think is absolutely correct. It does sort of favor all the global things that you talked about do favor India in a significant fashion.
Okay, Prabhat, the one big sector that we haven't spoken about till now, I mean, we've spoken about the global construct, we've spoken about earnings. What about financials? What happens there? Because I just want to understand your personal view, because I get equal and opposite number of people who say that it's a good time to play contrarian and therefore buy the PSUs, and then there is the opposite number which says that don't even touch PSUs with the barge pole because there is enough levers in the private banks or the private financiers, and let's stick to them because they are tried and tested. And then there's the whole NBFC gamut, which is also a very large space now with housing finance and a few other spaces thrown in, and these are significantly large market caps as well. What would you be advising your top clients to do right now in the financial space currently?
So I think the fact is that if you really think from a market participant perspective, the largest weight, if you are sort of index benchmarked, will still be in private banks. So you have to be necessarily sort of more balanced towards private banks, first of all. Secondly, there is no doubt that in the last 1 or 2 quarters, the unease with the PSU banks has grown primarily because of the NPA issues, and that may have gotten to valuations, may not have. This sort of difficult to sort of guess, because the next 2-3 quarters are also not going to be that great in terms of NPA news. You could argue that the stocks have fallen, but the fact is that the fundamental news is not going to dramatically improve as far as their businesses are concerned. There are a couple of banks, obviously, especially SBI, which probably do not have issues which are as thorny, but there are a number of weaker private banks which have seen deterioration in asset quality. So from an investor perspective, I think it's still probably easy sort of call to continue to play private sector banks, because one, they will benefit from any growth pickup because they have capital. Secondly, their NPL issues are much less thorny, so therefore you're not going to get any rude surprises. Thirdly, they're not very expensive. If they were very expensive, the PSU banks obviously are cheaper, but compared to history, even private banks, sort of have lagged the market somewhat, especially after they touched their peaks in January. So they are not extremely expensive. Let's say compared to consumer or pharma. So you still have a lot of comfort in terms of just where you're buying these things. And lastly, everybody benefits if there's a rate cut or if there is inflation data print or growth print. I think more so private banks, because they have the ability to participate in any growth uptake. So I think at this point in time, from investor perspective, it is a large part of the portfolio still should be in private banks, and at the margin you could buy some public sector banks, but then you have to be very careful about asset quality, and we think the larger ones are good. On NBFCs, we have typically favored mortgage companies because their assets are still growing. They benefit from sort of a better liquidity environment because the deposit costs or the sort of funding costs come down and their margins expand, as we have seen in case of LIC Housing Finance. So mortgage is something that we continue to like as a sector. Obviously, smaller ones have valuations are better, so there you have more comfort. So net, I would think that as a sector benchmark or as a benchmark to index, where the private sector participation is much larger, we will still be overweight financials, because any positive news on the economy will definitely lead to our performance in this sector, especially given the valuations.
Indian domestic investors are back. That's the big needle swinging move. $10 billion is what they've got in FY15, $15 to $17 billion is what mutual funds and insurance companies have indicated this year. Is that the biggest change?
Well, I think it is a change for sure, because all said and done in the last 5 years, you would have seen that most of the domestic investors save a lot. First of all, India's savings rate is largely concentrated in households, and they were saving in gold and they were saving in real estate. And they have always typically saved, and they were saving in bank deposits, but they have never saved in equity to the extent that they can save. I mean, we are one of the lowest in terms of equity participation in the world with the size of the economy. So I think, given the fact that your gold prices are no longer inflating, given the fact that real estate is no longer looking as attractive, and frankly, right now, obviously bank deposits are not that bad, given the fact that your real interests are pretty decent. So between equities and financial assets, overall financial assets will grow because the other asset classes are looking pretty weak. And secondly, within equities, I think there will be more allocation just because the alternative opportunity, is quite poor in terms of capital growth. And finally, I would think what you said about SIPs. I've heard it from many of my friends in mutual fund industry. This is a big news, because this SIP culture actually essentially means that you get a regular flow, and if you go to US, they have 401ks where they continue to allocate a large portion of their money into equity. We have had no such culture in India. If it does become a culture, then it's a very big positive news from the long-term perspective, because so far we have essentially been dependent on foreign flows to drive our markets. This year, at least in the last 3-4 months, clearly it has been domestics who have driven it. So the first time I am seeing it on a very sustained basis. If that continues, great news from market perspective in terms of just holding the volatility. If the foreign investors, because of global reasons, sort of are exiting out of the market. So that, I think, is quite positive.
Prabhat, pleasure that you could join us today and analyze markets, earnings and all the news flow, really.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.